Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, April 23rd, 2018. We're going to take a quick look at the equity markets, followed up by an overview on crude oil and some potential trading ops there. Next, we'll roll into uh, lumber futures as well as the timber stocks, and touch on Bitcoin real quick, and then finally, let's see here, we'll follow up with a quick look at the U.S. dollar in gold. I always get a lot of questions on gold, silver, GDX, and there are some notable developments in the dollar, so we'll try to go through those four main sectors: broad markets, crude oil, lumber, Bitcoin, and well, the U.S. dollar. You want to count that too. So, all right, this is a 60-minute chart of QQQ. What stands out to me here, we have a potential, but so far it looks like almost a rejected cross on the 60-minute chart. The chart I put up on Friday, I believe, was a 30-minute chart, the one making the case for the bounce this week. And it was, so far we've had the bounce. The Qs were up about as high as 1%, I think, today, earlier. Gave back some of those gains so far, but still green. So across the board, the markets are green, have been all day. We gapped up and we've remained positive all day. So here's what I'm watching right now. A couple developments. I'd like to really see a bullish cross on the 60-minute chart. Not so crazy the fact that the 9 EMA, that white dotted line, the signal line on the PPO is now below the zero line. That's not a great sign, but let's see what happens. Most importantly, we have this really significant support level here, which again, that was that neckline of that inverse head and shoulders pattern. A lot of reactions from below, and then once we broke above it, you can see that level as broken support, or I'm sorry, resistance once broken becomes support, and that's what happened here. So we broke above, back tested it for a while, and then boom, off to the races. So let's see if this holds on any pullback. I laid out a scenario this morning that if we get close to it, we're probably going to undercut it. It's just how it works. I can't guarantee that, but what happens is a lot of folks have stops right here. There's probably a lot of people looking to short, non-believers in the rally, as well as those who are currently long. So your longs will have a stop set somewhat below that level. Shorts will start to jump in. So what the market makers like to do, they see the stop clusters. The big boys, the Goldman Sachs of the world, they can see where all the stops are out there. And so what they do is they'll usually, if you get close enough to it, you're going to undercut it, and they'll run the stops and then reverse it. So that's my scenario. I laid it out on I think a 15-minute chart this morning. You can visit that. That's a static post on the front page of the site. Maybe I'll hit on that when we get down to the shorter term time frame. So as of now, again, even though this uptrend line was broken, and that, of course, was bearish, and that did lead to this event. The near-term trend for the time being remains bullish. And what I'm talking about here is whether you want to draw another uptrend line or at least look at prices making a series of higher highs and higher lows, and that is the definition of uptrend. Here's your lows, reaction low, reaction low, reaction low right there. And so far, we've made a higher low. And of course, in prices, these were two equal highs, and then we started making higher highs. So this, by definition, those purple lines show you that we're in an uptrend. Now, going off that premise, assuming that uptrend holds, an uptrend is an uptrend till it's not. By the time it's not, obviously, you're down if you're long, or you've had your stops taken out. Now, some of the things I'm looking at here, assuming that my near-term bullish scenario is intact, and at most we undercut this 161.66 level by a little bit, here's what I'm looking at. Again, going off the assumption this is just a pullback within an uptrend that has more room to run. During an uptrend, oversold readings, and this is on a 60-minute chart, are usually very fleeting. Sometimes you even reverse just shy, just as we did back here. If you look closely, you can see that the RSI never hit that 30 level, that blue line. This was during an uptrend. This was the one big correction during this uptrend off the early February lows. So as you can see there, we went up. We had a correction. Things looked ugly. We even had a divergent high like we did on the shorter term time frames here, and that led to that correction. But then we had another thrust up and made a new high. And then at that point, we put in some pretty solid divergences, and then we went down. So again, in a downtrend, oversold tends to become more oversold, meaning go beyond or well below the 30 level, or stay oversold for an extended period of time. That's what you get during downtrends. And if you can get divergence, after those, that second oversold reading or cluster of oversold readings, and they're a little less than the first one, you have bullish divergence, as we did here, oversold, oversold. There's the divergence lines. Boom, that led to the rally. So this, again, this is my go-to swing trading time frame. But in this fast-moving market, I've also moved down and put a lot of focus lately on the 30-minute, 15-minute, and even 5-minute charts. Trading, stock futures, NQE minis, been my go-to recently. Trading them long and short, in and out. Also swing trading them. And again, with a volatile market, it doesn't take a lot. In just one or a few days, you can make several percentage points. It's that's the norm lately that the daily swings are 1% or more on average. So it's great if you're an active trader. And if you're not, I get it. If you're a swing trader, pay attention to this chart. Let's see what happens if we break this 160, 166 support level. We already tested it once, as you can see, and that was a successful test on Friday. We came back and almost hit it to the button when you look at that candlestick there, and then reversed. So far this rally is petering out a little bit. That's a pretty big red candle. Indicates to me we're probably going to want to come down and maybe test it again. And like I said, to test it effectively in my book, you're probably going to undercut it. Just my guess, but we'll see. So, I'm holding on, keeping my longs for now, and I'll give them a little room under there. And again, that will then tell us if we go much lower, we're going to cross down below oversold again. So that's a second hit, not just a quick kiss of the oversold level. We're going to break support, and that could bring us all the way down, towards, the bottom end of this inverse head and shoulders bottoming pattern there. So a lot of discussion there on the 60-minute chart. 30-minute, we just get down, same chart, same trend line, but you can just look a little closer and see some of the recent developments. Right here, as I pointed out, this was, time to get short. You had these high-level bearish PPO crossovers in conjunction with overbought readings on the RSI. Doesn't get much easier than that. But just like that, on the flip side, I didn't have it marked on this chart because the last time I did this, I was making the case for a pullback. But you look down here and you can do the same thing in reverse. Let's just circle all the oversold readings. Well, that's that green line, which is down at 30. There you go. Even this one came very close, so now we can look ahead. If you look above, you'll also note that either in conjunction or shortly thereafter, usually had bullish crossovers on the PPO. So it's the same thing in reverse, only these are buy signals instead of sell signals. So that's what I'm looking at. You can follow this chart up, freeze the video. I don't want to waste time circling every inflection point, but these were all, you can see above, inflection points or bottoms. And so now what do we have? We did cross. There is a bullish cross. Lines are starting to roll back over, but there was a bullish cross. And so unless that proves to be a whipsaw signal, it is a buy signal. And that came right here. And so that's why I'm sitting tight for right now. And at this point in time, favoring more upside on, more upside in the Qs. Maybe coming in back test, I'll give you some targets there. I think I already laid out some targets on the NQ. And there it is on the 15-minute chart. Let's not even spend any more time on there. SPY traders, SPY. You have this yellow uptrend line right here. Let's color code that a little brighter so it really stands out on the video. And you can see one reaction right here, a second reaction here, and quite a few reactions here. So this trend line is now validated. I had it set at a little dimmer color because it was a potential trend line. In my book, at least, the way I look at trend lines, it takes a third reaction to validate a trend line. Any 2 points can be connected at random. So I look for at least 3 reactions, and we've had numerous reactions now on this 60-minute trend line. These are 60-minute candles. 1, 2, 3, 4, 5, 6, 7, 8. I had a request in the trading room to do a video on trend line drawing. I'll have to do that when things slow down. Right now, there's so much motion in the markets, a lot of trading ops, and that's what I'm focusing on. And this volatility will calm down sooner or later. Markets don't stay at elevated volatility levels forever, and then things will slow down. I won't be doing as many updates and videos. We'll kind of pare back on our trading so we don't overtrade. and wait for the next setup. So in other words, the market will consolidate or at least maybe trend in a more controlled fashion. At which point it might become more conducive to swing trading as long as we're not in a sideways trend. All right, so let's see what else. Well, same, this is very similar to the QQQ chart. You can see that. So we're just a hair below the zero line with that PPO indicator. I like it, to see that white line, the 9 EMA above, indicating the trend is bullish. So if the markets can hold, maybe we get it. Sometimes you get a little brief whipsaw signal across. So let's watch this level. And again, that would also be a stop raid and be quite bullish if it breaks down and reverses. Now, a breakdown by itself is a warning sign. There's trend line, and I also gave you the support level a minute ago, horizontal support level on QQQ. In fact, let's look here. Another thing I should point out is on SPY we also had that inverse head and shoulders pattern right there. 266.87 was a magic number, give or take. Of course, it's almost a 300 point ETF. So, but here's what I'm looking at. You had a lot of reactions there, a little false breakout. Then we broke out, and now we're back testing that level. And this is just perfect technical analysis. Like I said, when volatility ramps up, traders flock to the charts. Fundamentals take a back seat to technicals in the very near term, with funds looking to what to do position, active traders step in, and then these levels become very significant. You can see how well they're respected. And you might say, well, Randy, I see some candles above and below there. I mean, you're going to trade around. There's a lot of volatility. You're not going to hit the to the penny that level, but you see reactions around it, and that shows you that the SPY right now is respecting two support levels, this very important 266.87-ish level and that uptrend line. So a breakdown below will say that we've now broken. This was very significant, at least on the short-term time frame, very significant resistance. So it should be significant support. So anything other than a brief false breakdown to run some stops and then ramp back up, anything much more than that will be bearish. So if you're looking, if you're long or looking to get short, if you're long, maybe a stop a little bit below that 264.88 level, somewhat below there. That'd be a good stop level. And if you want to short, if you think the market's going to break down, it would certainly put our trend indicators bearish, get us more deeply oversold, and give us some evidence that maybe this is the early stages of a correction. Maybe that was all that we're going to get for that bounce before the markets run at make another run at the lows. But I still very much favor this upside scenario. So I'm not trying to give you contradictory technical analysis. I'm just telling you what to look for. You got to stay flexible. That's the key to trading. I don't get married to any one scenario, no matter how strong a case I can make, bullish or bearish. You fall in love with a trade. You fall subject to confirmation bias, which is seeing what you want to see and dismissing anything that doesn't agree or support your case. That is it's one of the biggest detriments in trading, in my opinion. All right, so let's move on. And I don't know if it's worth looking at the 30-minute chart on SPY because you're going to see the same story, but there it is, divergent high, same levels. Let's not waste a lot more time on that. It's the same thing on just shorter time frames. IWM, I did have a request from a member on IWM where that's probably headed. And if the bullish case holds up, and again, these, the major indices, even the small caps, are going to follow to a little bit of a lesser degree, but to certainly to some degree, they're going to follow the large caps. So if you're trading IWM and that's all you're trading, do not trade it without keeping an eye on those levels I just talked about on QQQ and SPY, because if we start to break down there, then IWM will break down. But what we had here so far is a left shoulder, two left shoulders. So this was a head and shoulders bottoming pattern like we had on the large caps with two left shoulders, well-defined neckline. I mean, beautiful technical analysis in my opinion. I'm sorry if you guys think I love charts and I love when trading, when everything kind of comes into play and the technicals are working so well. It makes trading a lot easier than when we were in that slow grind with the low volatility range for the longest period in history up until the January highs. So there it is. We broke out. We made a successful back test, and then we rallied up. So this is either a pullback to support 156.36. We're starting to crack that now. The IWM has actually turned red already. Needs a reverse soon. Otherwise, it's probably going to come back down for a second back test, and this would be the next support level. So if you are long IWM or looking to get long or looking to short it, this is the next significant level. You could go long here. I wouldn't right now. There's a red candle when we zoom in. See that pretty big red candle? I would wait to see a reversal, get back up above 156, well, 155.36, especially, if we can engulf that candle, move back above this red candle. That's where, if I weren't already long, if I was looking to trade IWM, I'd either buy it there or I would buy it on a pullback. If this level goes in those scenarios I outlined on QQQ and SPY, I wouldn't try to catch every last cent of a move down to 153.72. I'd probably be stepping in around 154, 153.90, somewhere in there, and then look for a reversal with a stop not too far below. Again, that's all trading. I can't guarantee what's going to happen. Nobody knows for sure, but I can tell you where objective areas are. We know this is a well-defined former resistance, now support level that should contain any pullback if we get there. And if it doesn't, then the outlook has changed. Trend indicators will be clearly bearish. Um, so, if you go long there with a stop somewhat below, your risk reward is attractive because if you're stopped out, you lose whatever it is. You can set your stops 1, 3, 5%, whatever you want. Probably about a 1 to 2% stop, maybe around 2%, and to try to quantify it for you. If we get there, and we bounce up back again to this 158.34 level, there's about a 3% bounce. So yeah, that would have you'd actually, if you're going for that target, you'd want to use no more, in my opinion, than a 1% stop loss. That would give you a 3-to-1 risk reward ratio. You're risking $1 of loss for every $3 of profit. And of course, we could go higher from there. So that's right now near term stuff. Those are the levels I'm looking at. Guys, I've decided just over 16 minutes into this video, and I'm going to stop it here. That way, I can put this one out on YouTube and on the website on the right side of the chart as free content. This is just general market analysis, and I'll chop it down into a separate part to covering the trade ideas that stand out to me right now with price targets, namely what I mentioned earlier in the video: crude oil, lumber, timber, Bitcoin, gold, U.S. dollar. Those aren't, all actionable trade idea. I have thoughts on those. There's some significant technical developments. Some of those are, very, lucrative, I think, trade ideas, and I'm already positioned in some of those names. And I'll also update some of the other trade ideas on the site that I've covered recently. So again, this video, we'll stop it here, just covering the broad markets, and then I'll follow up with a private video for members on right side of the chart on trade ideas. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.